Welcome to my channel guys. Now we are gonna learn about going concern concept. No person starts a business with an intention of shutting down the business in an immediate subsequent periods. Mostly people start a business to run it for a prolonged period. Keeping this on mind, we need to prepare a financial. Now let's see an example sum here. Opening balance sheet is given. Some of the additional information are given. We are asked to prepare an P&L account and a balance sheet account for two scenarios. One for assuming it as a going concern, the another one is not assuming as going. First additional entry is the remaining life of fixed asset is 5 years. The pattern of use of the asset is even. The NRV of fixed asset is 60,000. So opening fixed asset is 65,000. The remaining life of fixed asset is 5 years. So 65,000 divided by 5 years, we will get depreciation. We need to debit the depreciation of 13,000 in the debit column of P&L account. But the same entry cannot be happen in ongoing concern. We need to reduce the net realizable value of fixed asset 60,000 from the opening balance of fixed asset 65,000. We will get 5,000 rupees. We need to debit that 5,000 as depreciation in the P&L account. The second additional information is the traders purchase and sale in 2012 to 13 amounted to 4 lakh and 4.5 lakh respectively. Purchase was made for 4 lakh and sales was made for 4.5 lakh. So we need to write 4 lakh as purchase for both going concern and non-going concern. Sale for 4.5 lakh and 4.5 lakh. There is no need for any changes here. Third additional information is given as cost and net realizable value of stock on 31st/3/2013 were 32,000 and 40,000 respectively. Usually in a going concern, we enter closing stock as cost or net realizable value, whichever is lower. Here cost is lower than net realizable value. So we need to enter 32,000 as closing stock in the credit column of P&L account. But for non-going concern, we need to write 40,000 net realizable value. Usually in non-going concern, we need to enter entries in net realizable value. Fourth additional information. Expenses for the year amounted to 14,900. We need to debit the expenses 14,900 in both the cases. Fifth additional information is given as deferred cost amortized equally over 4 years. Deferred cost given in the balance sheet is 10,000 rupees. So for the year 2013, we need to debit 2,500, and in 2014 you need to debit another 2,500 in P&L account. Then 15 and 16, 2,500 respectively. So in going concern, we need to debit the 2,500 in the P&L account, but not in the case of not going concern. If you're gonna shut down the business, you need to debit the whole 10,000 in the P&L account in the case non-going concern. Sixth additional information. Closing debtor is given as 25,000, of which 2,000 is doubtful. In the going concern assumption, we need to create a provision for 2,000 and we need to debit that in a P&L account. Collection of another 4,000 depend on successful reinstallment of certain products supplied to the customer. We don't need to create a provision for 4,000 in a going concern. If it is not a going concern, we need to create provision for 2,000 and the 4,000 as well, and we want to debit the 6,000 in the P&L account. Closing trade payable is given as 12,000, which is likely to be settled at 5% discount. While paying, we are not going to pay 12,000, we are going to pay 11,400. So in going concern, we will not credit this 5% discount in P&L account due to conservatism principle. But in case you are going to shut down the business, you need to credit this 6,000 in P&L account and show this as income. Closing cash balance is given as 37,000. We have seen all the additional information. Now let's move to the P&L account. If there is any left out items are there, let's see about it. Closing stock of previous year is the opening stock of this year. So opening stock is 30,000. Purchase we have seen, expenses we have seen, depreciation seen, provision for doubtful debts seen, deferred cost seen, penalty seen, sales we have checked, closing stock we have checked, trade payable we have checked. So now reduce these expenses from the income, we will get net profit. In both the case, net profit are deferred. Now let's move to the balance sheet. Fixed asset in the going concern is 52,000. It's a carrying amount. In the case of non-going concern, it's 60,000. It is net realizable value. Usually in going concern, we will write a fixed asset minus depreciation, and a carrying amount should be written down in the asset side. But not in the case of not going concern. We need to write it down in a NRV. Stock 32,000 in going concern, 40,000 in non-going concern. 40,000 is NRV and 32,000 is cost or net realizable value, whichever is lower. Trade receivable, 25,000 minus 2,000 is 23,000. 25,000 minus 6,000 is 19,000. Deferred cost, we have only debited 2,500 in the P&L account, so the balance 7,500 will be written down in the asset side. But in non-going concern, we have written the whole 10,000 in the P&L account, so the bank 37,100, there will be no difference and all. Capital, opening capital is given as 60,000, so there is no withdrawal or additional capital have been made, so there will be no changes. Now P&L account, opening P&L account is given as 25,000. Now we need to add the net profit of this year. With that, we will get 44,600 in the case of going concern, 47,200 in the case of non. 10% loan, 35,000, 37,500. That penalty amount should be added with this. Trade payable, 12,000 in the case of going concern, 11,400 in the case of non-going concern. In a non-going concern, we need to reduce the liability to the current value. Let's revise the topic. Whenever someone starts a business, we will start for a foreseeable period, not to shut down in recent times. And keeping this on mind, we need to pass an end. There is another important concept, fundamental accounting assumption. There are 3 assumptions are there: going concern, accrual, and whenever person prepares an financial statement, he needs to follow these 3 assumptions. If he doesn't, he need to disclose the reason why he didn't follow it. I hope you guys understand the concept. If you like the video, click the like button, share and comment. Click the subscribe button and don't forget to hit the bell icon. If you have any queries related to the topic, comment down. I will explain.